Welcome to Insured Investors, where we share practical real estate investing tips with an insurance twist. I'm your host, Brooke Beats. Let's get started. In today's episode, we are diving into a topic that could save you hundreds, maybe even thousands each year. How to reduce your property insurance premium. With return guest Jason Jones, we'll explore practical strategies to cut down your premium without sacrificing the coverage you need. Remember, even small steps can lead to significant savings over time. Let's get started. Welcome back, Jason.
Great, thanks for having me.
Nice to have you. Okay, so let's jump right into it. What influences insurance premiums?
Sure, so you have a few things that are pretty significant in establishing what the premiums are. You have property value, and that's where the more expensive property, say your Californias or maybe Florida, are more costly to rebuild and repair, so that's kind of built into that. Mm-hmm. If you're looking at more rural places, maybe like a western Kansas, then like you would kind of understand that the cost to rebuild out there is a little different than California. Mm-hmm. Location. Location's important because of some areas are more prone to natural disasters or just certain elements, we'll call it, mm-hmm. Theft and vandalism, those sorts of things. So you just have to consider where your property is, and the insurers definitely do. Additionally, you're looking at claims history. Claims history is pretty significant in that if you have a lot of claims, that signals a red flag, and in order to make an insurer comfortable, they're going to want to collect enough premium to offset what they feel like the risks are. Doesn't mean that if you have a claim that you're necessarily going to get penalized for it, but it's definitely important if you do have claims that you attempt to mitigate the risk sooner than later, and then complete all those repairs and report that back.
So, property value,
mm-hmm.
geographic areas, and claims history.
Correct.
Top three things. Okay. So why do insurance premiums vary by provider?
Sure. The providers themselves have their different appetites for the types of risks that they insure. It could be by experience, it could be by the amount of capacity that they were given, but at the end of it, they're assessing the risks that they're willing to take on. So if they like taking a location in Florida, then they're going to rate appropriately so that they can manage those risks. If there's a differing type of property or it's occupied versus vacant, renovation, those sorts of things, all that really does factor in. Then you're looking at their claims history. A particular person or business's claims history is one part of it. If you have more claims, typically you're going to see a different type of rate. On the other side of it, if the carriers identify that there are areas of the country that are more prone to some of those natural disasters, like your hurricanes, wildfires, those sorts of things, they're going to also rate that different. So more to say, if you're in the middle of Los Angeles, in the city, you're probably not going to be affected necessarily by wildfire ratings, but if you get out to the suburbs and closer to some of those national forests, you're probably going to see some more stringent guidelines to kind of manage some of that. Lastly, the state regulations. Some states have minimums and different rating structures that are built to allow for these companies to provide fair insurance for the clients or their businesses. On the other side of it, they want to also protect the carriers so that they don't then become insolvent from not insuring things in the right way.
Wow, there's a lot that goes into that.
Right.
There's some people that spend like their entire day as an actuary, right, determining all of these factors.
Right.
A lot to think about. Okay, so there are lots of ways investors can reduce their insurance premiums. We're going to talk about 5 key strategies every investor should know. First up, How can raising your deductible help lower your premium?
Sure. Well, increasing your deductible means ultimately you're self-insuring more, which lowers the risk for the insurance company, and that then the output is a lower premium. You can raise your deductible on some of the problem areas in your portfolio. If you're seeing more issues with wind and hail in a certain area, raising that deductible could kind of offset some of the costs, kind of bring it back to the mean of the rest of the group. You can also consider what amount you're comfortable with paying out of pocket before the insurance company starts to pay. So again, just moving your deductible around and then just basing it on what your business structure is, as well as what you feel like the likelihood of a loss occurring is as well.
Okay. Next. How can you save on insurance costs by making your property more resistant to a loss?
Sure. Property management helps you avoid preventable losses and demonstrates to your insured that you're serious about risk management. A lot of those things are pretty commonplace. You're cleaning gutters, you're cleaning limbs, sidewalks, driveways, that sort of thing. Just to kind of make sure that that there aren't any obvious risks or things that could pose challenges for people either passing by or that actually reside in the property. Even cleaning fireplaces prevents flue fires. Like all those sorts of things are really important. As an example, there was a recent claim that we had where a large tree appears to have been dead for a pretty long time, actually. Fell after a little bit of wind and struck a miner. And what it appears is this was pretty obvious risk, whereas the tree should have been maintenance, probably cut down to some extent, and this could have prevented this particular event. So it's important clearly to take a look at your property itself, just to kind of make sure things are there, but the premises are almost as important. If you have trees or broken sidewalks, steps, any of those things are a big deal to insurance companies. Also, many carriers will provide credits on the rates for working hardwire smoke detectors, central station alarms, sprinkler systems, those sorts of things, even smart home items like thermostats and just water detectors. It's really just about finding different ways to protect your property. You can upgrade your plumbing, heating, electrical systems. Those are also other ways to mitigate potential damage and loss.
Okay. And there's lots of resources out there that people can find, right? Like checklists of maintenance for property and...
Absolutely. Yeah. Most government websites, some of those manufacturers, they all have some sort of a checklist or some path for you to kind of understand what types of risks are there and to help you manage them.
Yeah. People often bundle their home and auto insurance to save costs. How can investors combine their properties into one policy, and how is that valuable for the investor?
Sure. So combining your properties onto, say, one insurer is really a good tool for the investor. And the reason I say that is that you're able to then understand how all of the properties will be managed. You don't have a deviation from one carrier to the next. You understand where your policies are. We have a lot of investors that may have changed 2 or 3 insurers over the years that they've been with us, and what they found is like, hey, I need to file a claim, and hey, the property's not with us. So I think in order to have some peace of mind, there is some value in having all of those locations in one place. Aside from that I think it is important not to necessarily bundle all of your personal assets with your investment properties. That allows for a line of demarcation if there's some type of lawsuit or something that pops up where that then places your not only your business in jeopardy, places your personal assets in jeopardy.
That makes sense. How does requiring all tenants to carry renter's insurance lower insurance costs?
Sure. Tenants, by and large, are interested in doing the right thing and protecting their property. But on the other side of it, tenants do things that are ultimately considered negligent. And oftentimes that happens on your property. By having them secure their own renter's insurance, they are then able to take on some of the brunt of whatever potential lawsuit could be, and then limit the opportunity for them to then have the claimant or whomever's filing the lawsuit to try to pull you in because you're the property owner. Oftentimes, if the renter does not have insurance, the next person in line is the property owner. And that's where if you do have a renter that has insurance, there's at least a buffer there that could effectively manage whatever that risk was.
Okay. Lastly, how should investors shop around and use an independent agent?
Independent agents are contracted with several carriers and programs. It's important to find one who understands your unique needs as an investor. Some agents specialize in locating coverage for renovation policies. Others specialize in occupied policies, those sorts of things. So it's just really important that they understand what your goals and what your needs are, and then that you identify the best agency to do that for you. Different carriers will often then provide different options and approaches to the risk in question, meaning your property. Independent agents have access to a lot of those different resources to give you the best opportunity to get the coverage you're looking for. At the end, you really just want to review the differences between costs and coverage, and then consider that cheaper isn't always better. Pulling back on your your premium costs to up your deductible may actually just kind of bite you in the end of it. So just really consider all of the costs before claim and after claim when you're making those decisions.
Okay. Where should investors not cut corners?
Liability insurance is one of those areas that it could be a very small cost, but then it could absolutely turn into a major expense. Most people don't understand that you're not only looking at what the actual loss amount is, you're looking at defense costs, you're looking at costs for investigators, arbitrators, mediators, like the whole grouping of that just becomes a large expense. So if you're looking to cut corners, that would not be an area where I think we would want to suggest you do that. We generally would recommend $1 million per occurrence, $2 million aggregate as a minimum. Clearly, you can kind of understand what your own risks are, but that's what we would recommend. Lower limits, again, just save just a little bit of money and still can leave your business dangerously exposed in the event of a serious lawsuit. Another area where clients really shouldn't cut corners is coinsurance. If your policy has coinsurance, don't be tempted to insure your property to a lower value just to save insurance costs. This can greatly impact your claim payout if you're underinsured. Just as a general example, we've had a few of these situations, but just in this grand scheme of it, if you have $100,000 fire loss, and you're in the co-insurance range, what you're looking at is your deductible being taken out of the coverage amount, the actual cash value amount being taken out of that, additional to whatever the co-insurance penalty is. So you could realistically get maybe 30% of what your $100,000 value of the claim would be. So it really, really is important to understand what the value of your home is and then insure it appropriately.
Okay. Great advice. You ready for the game?
I am.
Okay. So for our game today, we're going to present a potential money-saving strategy with options on how much it could save. And you're going to let us know which options you believe are correct.
Okay.
Ready?
I am.
Okay, so for the first one, insurance companies consider homes with smoke alarms a lower risk because they provide early warnings of fire, which can prevent a small fire from becoming a large one. How much do you think you can save by having properly installed smoke detectors? A, up to 5%, B, up to 10%, or C, up to 20%?
So as an adjuster in my previous life, I've seen in real time how much money could have been saved if the smoke alarms were functional for one, or even installed for two. So I am going to go with the high number. I'll go up to 20% for this one.
That is correct. And the smoke alarms you will always find on a checklist, right?
Yes,
Yes. Okay.
absolutely.
All right, increasing your property deductible from $1,000 to $5,000 could save you as much as 15%, 25%, or 35%.
Sure. So I haven't been in sales in a super duper long time. So I am going to go middle of the road with this one. Let's go with 25%.
That is correct. Upgrading your roof to impact-resistant materials makes it less likely for damage to occur during a storm and can potentially save you between 5 to 10%, 10 to 20, or 15 to 25%.
Let's see. So again, in my adjusting life, I can't imagine how many roofs I've been on, but those materials are similar in nature. There really is just a fine line in how they're used necessarily, some of the materials and things on them. So I don't think that it's a super duper high number, so I'll again go middle of the road just to kind of make an assumption.
Yes, it is 10 to 20%. So advice for investors is to, make sure you're maintaining your property.
Yes.
Know that you can change deductibles in order to offset some of the costs.
Right.
Any other last minute thoughts?
I think we still would consider not cutting those corners. Again, the liability cost is fairly minimal compared to what it could turn into.
Yep.
And then maintenance is super duper important. Just understand maybe some of the problem areas of a particular property, whether, hey, my roof isn't in the best shape, but I need to maintain it until I can get it updated, trim trees back. Like any of those things are really important at the end of the day.
Okay. Great advice. Thank you so much for being with us.
Sure. Thanks again for having me.
We'll continue to post new episodes on NREIG's YouTube channel, that's NREIG, and on Spotify and Apple Podcasts at Insured Investors. You can also follow NREIG on Facebook and LinkedIn. See you later.